Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically we are doing the Reserve Bank of India. Okay. And these are the topics basically we schedule for discussion in this particular series, like starting with the introduction, thereafter the monetary authority, thereafter the banker to the government, thereafter the banker's bank, thereafter the forex custodian, then the regulator and the supervisor, then the monetary policy, and then we are left with the forex management. Okay, so far we had completed the introduction, monetary authority, banker to government, banker's bank, forex custodian, regulator and the supervisor, and the monetary policy. Okay, so what we are left with, we are only left with the forex management. Got it? So basically I hope that you have revised the lectures, like the monetary authority, what you mean by it, bankers to the government, bankers bank, forex custodian, regulator and supervisor, and monetary policy. Okay, and in the previous lecture I had told you one thing, that monetary policy and the monetary authority both having the different scenario but both are interconnected. How? Because if we talk about them, all right, so you can say the monetary authority is basically the power vested with the Reserve Bank of India. Okay, this is the monetary authority, and this power has been granted to the RBI through which act? Through Reserve Bank of India Act 1934. Got it? Through this act, the power has been granted to the Reserve Bank of India. But when we talk about the monetary policy, then the monetary policy is an action taken by the Reserve Bank of India in order to exercise powers under the RBI Act 1934. Okay, so this is the difference between the monetary authority and the monetary policy. So does their provisions are also different. Okay, monetary authority is a power vested with the Reserve Bank of India under the RBI Act 1934, also called it as a Reserve Bank of India Act 1934. Whereas if we talk about the monetary policy, then it is an action taken by the Reserve Bank of India in order to exercise powers under the RBI Act 1934. Got it? Thereafter, similar like this, you can say forex custodian and the forex management is also different. Okay, like, and also connected. How? Let's see. Okay, so here you can see that there are two words. First is the forex custodian, first word. Second is the forex management, second word. Okay, so if we go by this particular definition, then what will happen? Forex custodian is basically the holding, or you can say storing of the foreign currency. This is the forex custodian. Okay, whereas foreign management is basically, you can say, holding, or you can say strategically holding and storing of the foreign currency to meet the forex obligations. Okay, so this is the difference between the forex custodian and the forex management. Alright, forex custodian is just a term. It means that holding or storing of the foreign currency, but the forex management is basically, you can say, it is a strategically holding and storing of the foreign currency to meet the forex obligation. For example, you can say, suppose if we talk about the general store, okay, so in general store we know that there are something which is sold to the people, all right, in order to earning of this particular store. Okay, so we know that every store or every showroom almost having which almost having the you can say the storage or the godown. Got it? Storage or godown. So basically the storage or godown, you could understand that these are the basically supplier, or you can say secondary supplement to the store. Okay, because whenever you go to the showroom and any other places, suppose this is you and you go to the area, mostly time it happens with you, like you go to the showroom and you are asking for something. All right, suppose you are asking for the product ABC. Okay, and the store owner says you that the ABC is not available in the store, so that he will ask it from the storage or from the godown. Like many times it happens with you. You go, they say, okay, sir, we do not have it in the store. Please wait for a minute. We will take it from the storage, or you can say godown. Okay, it means that this is the supplier or the secondary supplement to the store. If something finished off, or you can say not presented in the store, then this thing will be supplied by the storage or the godown to that particular store. All right, but even in some cases, what happens that generally this value is not even presented in the store and godown, so it is gone as an unavailability, right? Like when you go there and you ask that I want ABC, they say, okay sir, we do not have it. You say check your godown, and they say no sir, we don't even had it in a godown. So this is kind of situation. Okay, so this is the storage holding. Okay, it means that the showroom, or you can say the godown of that particular showroom, is holding the items. All right, suppose the 100 units, or you can say the 100 items are being holded in that particular storage and whatever you can say. So what do you mean by it? It is the storage management. Okay, but when they bifurcate this, okay, and they say that we required A, we required B, we required C, and we required D. Okay, we required these items, additional quantities in our storage: 25 of A, 25 of B, 25 of C, 25 of D. So if you add them all, it will become the 100 units. Okay, so just maintaining the 100 units is a management, but 100 units will comprise whichever things. This is the management. Got it? Similar things happen with the forex reserve also. Okay, in such a case, you can say, suppose this is an forex reserve. It is an forex reserve. Okay, and remember I had told you that in the international trade or in the foreign transactions, basically we had the two ways. Basically, generally we practice the two ways. The first way is dealing in their own currency. First way. Second way is dealing in their, or you can say dealing in the universal currency. Okay, so there are two ways. So if we look at this word, then you can say, suppose this is the person who lives in India. This is India, all right, and the person is basically doing a trade with another country. Let's call it Brazil, for example. All right, Brazil, or apart from Brazil, the most precise answer you can say, it's like Dubai. Okay, so now here I have two questions for you. What is the currency of India, and what is the currency of Dubai? Okay, so for this question you have 10 seconds and your time starts now. It's 1, it's 2, it's 3, it's 4, 5, 6, 7, 8, 9 and 10. The time's up. So basically if we talk about the India, then the India having the currency, it's known as the Indian National Rupee, also known as INR. Whereas when we talk about the Dubai, then Dubai having the currency which we call as Dubai Dirham. Okay, so these are the currency. It is for your general knowledge. Okay, and it is also for our example. So now you can see, if there are two different parties, one is residing in India, another one is in Dubai. Okay, and if they want to do a trade with each other, this one wants to go there and then they there. If this is a cycle, okay, doesn't matter whether this is a buying or there is a selling, each and everything will include the transactions. Okay, and the transaction will be done in two different countries, Indian National Rupee and in the Dubai Dirham. Because we are taking the example of the Reserve Bank of India, which is in Bank of India or Central Bank of India, doesn't have to do with anything with the Dubai government and Dubai functionality. So we will take it into the Indian context. Okay, for this, what will happen? There are two scenarios. If we talk about the buying, for example, if we talk about the buying and thereafter we have the selling. Okay, so let's first see the buying. It means that we are purchasing something. Okay, so if the person is purchasing something, then the person is required to pay to the person who is in Dubai. All right, and the currency of the Dubai is dirham. So what the person will do, as per the exchange rate, this person will convert the Indian National Rupee into the Dubai Dirham. All right, and then he will pay the dirham India to Dubai. First scenario. Okay, it is a first scenario. But second scenario is the person is selling something to them. All right, it means that when we are selling, then basically we are now earning something from outside, right? This is the selling part. We are earning something from the outside. So when we receive the income in the form of Dubai, in the form of dirham, we are required to convert it into the national rupee, right? So here there are two case scenarios which we had discussed. In both the cases, the currency is converted into the another currency. So if we take a case of the first one, it means that when we are buying something, it means that now we are liable to pay. Okay, so when the person reached to the authority, it means the banks and you can say the Reserve Bank of India, for the conversion of the Indian rupee to the Dubai dirham, it means that the person is asking for the Dubai dirham. Got it? So if the forex reserve holder, the Reserve Bank of India, will have the dirham in its storage, then only they could convert it. Now, if they do not having the dirham, how they will convert it? Okay, Similarly, if we talk about the selling, okay, selling means if we receive the income, means we are receiving the dirham and now we are required to convert it into the Indian national rupee. Okay, so in such a case, if the person reaches the Reserve Bank of India, or you can say the banking authorities in India, and ask to convert the dirham into the INR, so basically it's totally depend upon whether there is a need of dirham in the reserve or not. What if the Reserve Bank of India does not deal with the dirham? So is it possible that the Reserve Bank of India will take the dirham and then convert it to the INR? No, or you can say very less chances of it are there. All right. So this is the first case when we talk about the dealing in their own currency. Second one is the dealing in the universal currency, as we had discussed that instead of dealing in the Indian national rupee or the Dubai dirham, basically we will replace it with the international currency, which we called as an what? Which we called as United States dollars, USDs in short. Okay, so these are the two main cases. Got it? So here I have just explained you the things, how the things could be done. But right now we had just taken example of the storage. Okay, it means that we had taken the example of which thing? About the forex custodian. Okay, we had just taken example of it, means the forex custodian. Right now we have to understand the forex management also. Okay, like if we go by the example of the general store. Okay, so we had seen that the thing, if the thing is present in the godown, this thing will be a part of the custodian, or you can say part of the storing. ABC present with the godown is a storing. But if the godown is containing the 100 units, then how much quantity of each unit will be contained or will be stored in the godown is a management. Similar things happen with the forex reserve. For example, if you can say, suppose we have the forex reserve of total worth of 6 billion US dollars. USD or US dollars, 600 billion US dollars. For example, we had the forex reserve of it. Okay, this is basically contains the three factor. These three factors are foreign currency, gold reserves, third one is a special driven rights, right? These three things are there. And which organization mandates for these three things? International Monetary Fund, IMF. Okay, so basically when we talk about the 600 billion US dollars, does not mean that we only having the dollars in it. Basically we having the foreign currency, gold reserves, and the special drawing rights, which are converted as per the exchange rate, in the valuation of the dollars. Okay, so 600 billion US dollars is the total quantity, or you can say total amount. Okay, but when this is bifurcated, it means that 300 we had only the foreign currency. Okay, 200 we having the gold reserves, and worth 1 and worth 100, we having the special drawn rights. So if we sum up all of them, it will be around 600. Okay, so this is the total quantity and total amount, but this is the bifurcation. So this is the case of custodian, but this is the case of management. Okay, so that's how the system works. All right, now I hope that you have got the clear-cut idea of the forex custodian and the forex management difference. Okay, so why I have put on, you can say, efforts on it, because I want to make sure that you got a clear-cut idea about the things we are going to study. Okay, you should not be inclined towards the forex custodian and the forex management similarity, which most of the student does. Okay, so it's my duty to protect it from you to protect you from this kind of situations. All right, so that's why I had told you the things through the example. Now let's move forward. So if we take an introduction of the forex management, like what does the forex management means? So you can say foreign exchange management is a crucial aspect of the Reserve Bank of India's responsibilities, aimed at the facilitating external trade and payments as well as maintaining the stability in the foreign exchange market. Here you can say that it is a facilitating external trade and payments. Like we had taken example, if we are doing the export and import. Okay, so there are the chances of two scenarios: when the countries demanding the payment in their own currency, and when the countries are you can say agree to pay the amount in their respective you can say in the universal currency. But in both the scenarios, the forex reserve will be utilized. Okay, second is as well as maintaining the stability in the foreign exchange market, because if we could say, suppose there are two things: appreciation and the depreciation. Okay, there are two scenarios. In both the scenarios, basically you can say diffuse of rupee into the market. In such a scenario, you can say infuse of rupee into the market. About both of them, I had already told you. Okay, in both the scenarios, basically what will you use? Forex reserves will be used, or you can say utilized. Okay, that's why doesn't matter whether it's an import and export, international trade and whatsoever, forex exchange market stability is crucial. Okay, thereafter, regulation of the foreign exchange transactions. RBI regulates all foreign exchange transactions in India, including the trade transactions, capital flows and remittances. It means that if any party, any organization, any institute, you can say, indulge in any kind of foreign transaction, means the import, export payments, balance of payments, whatever you can say, they have to cross the Reserve Bank of India's checks. Okay, or in short, you can say without crossing the Reserve Bank of India, the things could not be done in the terms of foreign exchange transactions. All right, whether it's a trade transactions, whether it's a capital flow, whether it's a remittance services, the Reserve Bank of India will be indulged at every point of time. Sets the rules and guidelines governing these transactions to ensure they are conducting smoothly and in compliance with the law. As we had already discussed in the previous lectures various times, that in order to ensure that whether the things are in the accordance of the law and the compliance, first of all we have to provide a clearly defined rules and regulations. Okay, until or unless the rules and regulations are not provided to the participants, how they will know that what to do and what not to do. All right. So this is the thing. Maintenance of the foreign exchange reserves. RBI manages the country's foreign exchange reserves used to stabilize the currency and facilitate international trade. Okay. These reserves are held in the various forms like we had discussed. They are not only included the foreign currency but also included the gold, the special drawing rights. Okay. And these all are converted into the US dollars. These all are converted into the USD, and also we call it as a United States dollars. Okay. And this is totally depend upon which thing? It is totally depend upon the prevailing exchange rate. Okay. And this is basically issued by which? It is issued by the International Monetary Fund, or you can say in short the IMF. Okay. Thereafter, if we talk about the exchange rate management, like in the previous slides and in the previous lectures, we had discussed that it is basically based on the exchange rate. What is the exchange rate? Exchange rate is basically, you can see the ratio, currency 1 ratio to currency 2. It means that how many currency 1 you have to pay to obtain the how many currency C2, or you can say how many currency C2 will be obtained by paying C1. Okay, this kind of things. So the RBI plays a key role in managing the exchange rate of the Indian rupee against other currency. It intervenes in the foreign exchange market by buying and selling foreign currency to maintain a stable exchange rate. We had already discussed this in the previous lecture. RBI aims to prevent the excessive volatility in the exchange rate, which can have adverse effect on the economy. Okay. If we talk about the facilitation of external trade and the payments, RBI's foreign exchange management policies designed to facilitate the external trade and payments, we had discussed already, provides facilities and mechanism for businesses and individuals to engage in the international trade and make cross-border payments. This is what we have already discussed. Okay. RBI promotes the orderly development and maintenance of the foreign exchange market in India, ensures that the market operates efficiently, transparently, and in a manner that is conducive to the overall stability of the financial system. Monitoring and surveillance, as we had just discussed, RBI monitors and surveils the foreign exchange market to detect and prevent any unauthorized or illegal activities, take actions against entities that violate foreign exchange regulations such as money laundering or terrorism financing. Okay, as I told you, doesn't matter what kind of transaction you are doing, if it is an international transaction, it will be under the surveillance of the Reserve Bank of India. Okay, so students, basically in this lecture, we had finished the Reserve Bank of India. In the next lecture, we will start with another important topic. Till then, just revise all the facts and figures we had discussed in this particular lecture. Be ready for the another lecture. With this note, let's end this lecture, and what we say thank you.